Financial markets knew this was coming and they rallied anyway. Stocks surged on Wednesday after the Federal Reserve came through with its promise and raised short-term interest rates 1/4 percentage point to between 0.75% and 1%. Janet Yellen said more interest rate increases are coming this year because the Fed is becoming more confident about the outlook.
For some time, the committee has judged that if economic conditions evolved as anticipated, gradual increases in the federal funds rate would likely be appropriate to achieve and maintain our objectives. Today's decision is in line with that view and does not represent a reassessment of the economic outlook or of the appropriate course for monetary policy.
This marks a new phase for the Fed. They cut short-term interest rates all the way to 0 in December 2008, and then they left them there through most of the recovery because the economy just wasn't growing very fast and inflation was below their 2% target for most of the expansion. They started to lift rates in December 2015. They lifted them just once in 2016, but now they say they're picking up the pace. If all goes as planned, the Fed is going to raise rates to close to 3% over the next couple of years, and eventually they're going to start winding down a giant portfolio, $4.5 trillion worth of mortgage-backed securities and treasury securities. But that is only if all goes as planned.